do that. Come on.
Okay, welcome everybody to today's second installment of our NAC Check-In Chat. We're glad that you all were able to take some time to join us here today. And we are very, very enthusiastic about the response we've gotten to this new communication tool that NAC is trying out for 2021. I've got a few announcements that I'd really like to make. The next version of Check-In Chat is slated for March 24th. The session is going to feature members of the NAC Government Relations Committee. Don Lear is putting together a discussion for the 24th, all around what the Government Relations Committee does and the things that they're working on all of our behalf. The free registration link for that will be out very, very soon. As reminders, I'd like to ask everybody to please stay muted, but please, please feel free to ask questions using the chat function. I know that our guests today would love to get a lot of questions about what they're going to present. So let's jump into today's program. We're going to talk about post-pandemic planning and how to navigate those unsteady waters. And today we're going to be joined by Chris and Steve Sciortino of Park Cedar Commercial Lending. And if that sounds a little funny to you, it's because today we're sponsored by AICP, which is also Chris and Steve's company. But I think that really gives them a unique perspective on what we're going to talk about today, because they are seeing this from both different angles. As a small business, a supplier, somebody who's been involved with our industry for a long time, but then also from their other venture, which is financial planning and services. So we thank AICP for their generous sponsorship today. And with that, I will throw it to Chris and Steve if they just want to maybe tell us a few words about AICP.
Good morning, or good afternoon, everybody. I guess it depends on where you are, maybe. So I'm pretty sure everybody knows or has heard of AICP, maybe, hopefully. At AICP, we represent some pretty big brands into the movie theater channel, including products like Sour Patch Kids and Swedish Fish, Oreo, Airheads, and Just Born, Mike and Ike, Nestle ice cream, and a lot of other products that we represent and sell into the movie theater channel, and have been for me over 20 years, Chris over 30 years. So we've been doing it a long time and know a lot of people, know a lot of you, and happy to see a lot of people again. It's been a while since the pandemic started, so we are really excited to kind of speak with everybody again. We've all grown accustomed, become a family. Miss all you guys. Can't wait to see everybody again at the trade shows and really go back to doing what we were all doing and enjoy those friendships and work colleagues again. So if anybody has any questions about AICP, what we do, how we can help when it comes to concessions and equipment like stanchions, you can always call us or email us. We'll have our information at the end of the presentation for everybody if they don't already have it. I don't know if Chris, if you want to share anything else.
No, I think you covered it quite a bit. I think everybody, I hope, knows who we are, and we're here to help and do whatever we can, even if it's not financial planning from the AICP side. We're here to help you plan whatever you need on promotional activity or anything, getting back to business and doing whatever we can to support that.
Well, again, we thank you and we thank AICP for their generous support today. And now I guess I'll turn the program over to Chris and Steve. Steve, the screen is yours, my friend.
All right. Let me grab this. All right, everybody. So we wanted to just talk to everybody about, as Chris had mentioned, we did, as a result of what happened in the world and with everybody's business, we did pivot. In the beginning, we pivoted and we're offering PPE products to a lot of our customers in the theater industry. Obviously, we weren't all sure how long it was going to last, but our goal was to try and get everybody hooked up with as much PPE stuff as possible so we could get back to being open. Obviously, that plan hit a bit of a snag because nobody got reopened right away. So now that we are trending that way, looking like we're getting back to it. During 2020, Chris and I began another company, another business called Park Cedar Commercial Lending, where we are a part of a network of over 80, 90 different lenders and who have a multitude of products that we can offer to businesses in many different ways. So with that, we will get started. So just wanted to kind of start everybody off with, and I'm sure everybody knows a lot of this already, but just where we are today, or as of yesterday, 3/9/21, according to Johns Hopkins, there have been 92 million vaccine doses administered in the US. 31 million have been fully vaccinated, and that's all. There's a link there, and we'll share this presentation with everybody, anybody who would like, but that information is there on that link. And the following thing talks about how this current administration is pushing to have every adult American vaccinated by the end of May 2021. We just wanted to kind of share this information to tell you what we're thinking and share the news if you didn't know, but also it's what gives us our collective suggestions about how to move forward and what we're doing and what we're suggesting. According to Screen Daily, which again, this is as of 3/8/21, there's about 25% of all the US has listed capacity in their movie theaters of between 0 and 29%. I don't think anybody's at 0 anymore. So somewhere closer to 20 to 25%. Another 70% are between 50 and 70. And the balance don't have any restrictions anymore, like Texas, you lucky people. And I'm pretty sure Maine only has some social distancing restrictions. So that just gives you a little information about kind of what's happening with regard to the pandemic, recovery-wise, outlook, and all that. The next page, we just wanted to talk a little bit about SBA funding. This is SBA funding that you would have either gone direct and got, or will go direct to the SBA and get. This isn't necessarily, or you may go through your existing banking relationship to do this. So there was the first round of PPP back in 2020, and then a second round of PPP was funded at the beginning of January of this year. The eligibility for that funding varied between industries. It was 2.5 times monthly payroll for the majority of theaters. For the majority of industries. Restaurants were a little more at 3.5 times. These loans were all eligible to be completely forgiven, provided you used them for the things that they were eligible for and that you submitted your forgiveness. And there's a link there to the SBA site, which will tell you a little more about that program. The second one that's available is the COVID-19 EIDL funding. It's the Economic Injury Disaster Loan. Eligibility is up to $150,000 for these, and they could be used as working capital. Now, these differ from the PPP a little bit. This loan or fund is that. It's a loan. It's not something that's forgivable. You do pay that back at a really low rate of 3.75% unless you're a nonprofit, and that's over 30 years. And the first year was deferred from when you got it, depending on when you got it to when they're going to start you. So it's a really nice loan. It's a good way to get some support and some help to help you get through the tough times if you haven't already used it. The next one there is the Shuttered Venue Operators Grant. Now, this was established with the last stimulus package and specifically spoke to movie theaters, all venues. but movie theaters were specifically listed in there. Now, this got signed into law in late December. However, for reasons that we don't even know, and we're in this industry and speaking with banks and non-banking institutions that work with the SBA, and nobody knows when the date is going to be when you can start, when you'll be eligible to start applying for this. But you could get up to $10 million depending on the business that you were doing prior to COVID. And one thing that's really important, when we'll mention this a couple of times, but if you've applied or received PPP funds, not the EIDL, but just the first one up there, the PPP funds, on or after 12/27/20, when they signed the SVO grant into law, if you received or applied after that, you will not be eligible for the SVOG. You will need to not use the money if you did receive it after 12/27/20. And we can talk a little bit more about that as we go through it. But there's links here. Once we share the presentation with everybody, there's links there that you'll be able to learn a little bit more about them if on your own, if you'd like, or you obviously can always contact us.
Steve, there's also links to those on the NAC website. I just thought I would share that.
Great. Anybody have any questions? Sorry, I wanted to ask if anybody had any questions on that. Okay, so the SVOG, I'm not sure if everybody knows. I think you probably do, because it was specifically earmarked for our industry. But the shuttered venue grant program, really, we think, and it was the first time in the US that something like this was put together for something that's considered part of the culture. This has been done across Europe over the years and in different parts of the world, but never really in the US. Not that we've had an issue like this, but they've never really been as concerned with the culture of the US. And the fact that theaters were included in that obviously speaks to what the collective US does think about movie theaters, which I think puts us in a good position and makes us feel a little more wanted than we felt over the last year. But this just talks a little bit about some background documents that you're going to need. I won't go through all of them. Again, we'll share this with everybody. But you're going to be, you need a written statement of need and assurance, why you need the money, what it's going to be used for, the corporate documents that you'll have, articles of incorporation, certificate of formation, your government issued ID, and all those items listed there are the things you're going to need. And then there's the financial documents, from tax returns to quarterly income statements. This will give the SBA all the information they need to give you the amount of money that you're entitled to or requesting. It's really important for you guys to submit all the information that you need in as orderly and clean of a fashion as you can, because if you do that, it's just going to make it easier for you guys to get those loan products and those proceeds. The more discombobulated or out of order it is, it's going to be harder for them to share, to get those funds to you. So there'll be more back and forth. It'll be longer, and we know every minute counts right now. So do yourself a favor when you're applying for that. Have everything in order. Make it very easy for them to understand it, so you can get your proceeds as quickly as possible. So this sheet just talks a little bit about the motion picture theater operator, the live venue operator, and what the specific documentation that's needed to go along with the standard information that's needed from a business standpoint. For any live venue operators or promoters out there, there's a list there from floor plan to documents that show the venue has audio equipment and public address system, box office tickets, materials, and very similar for the motion picture theater operators. You need the floor plan, marketing materials showing that you are showing movies or did show movies, your box office ticketing and number of tickets that were sold through specific periods, just so that you can take full advantage of what you are entitled to according to this grant program that the government has put together for us.
And Steve, the shuttered venue program, that is also something you would work through your lender for, is that correct?
Correct. All of these, yeah, all of these you would work through your existing banking relationship. This is something that this is all gotten, through the government, but it's something that you would do through your existing banking relationship, or something you can do online directly. If you go on the SBA site, you can do it that way as well.
Will your lender review your materials? I know you had made the statement that you want to be as buttoned up as possible when you do this. Is that something your lender can help you with?
Yes, the lenders will definitely share that with them, but I wouldn't, when it's something this important. Chris and I have come across a lot of folks, and not for this program, but just in the last 9-12 months that we've been working on this, we've met a lot of people and worked with a lot of folks on loans for them. And we can tell you that it definitely, you don't want to put your access to this kind of capital in somebody else's hands. Don't take for granted that the banker is smart and knows what he's doing, or everybody else knows what they're doing. Do your own due diligence, gather all the information that you need. All these documents are needed, have them all together. Don't try to get away with not submitting one of them because you can't find it and you just want to get it over with and get it. This is obviously very important to everybody. This kind of programming is what will get us through. We all need it. We all want it. We all want to be able to use the product, the funding for what it's for, so that we can get to, end of May, June, July, when we all believe, theaters will start really generating the interest and excitement that we had anticipated long before the pandemic started. Ooh, sorry. And then I'll turn this over to Chris and let him talk a little bit about the additional SBA funding.
Yeah, I would just reiterate what Steve said about making sure that you're prepared for when the Shuttered Venue Operators Grant opens up. We're not exactly sure when it'll open or how it'll open, or exactly how the SBA will administer that. The last guidance was, I think, written down there was 129. And basically they've said that this has never happened before. They've never done anything like this before. And they're starting from the ground up. With everything from underwriting to funding. So we're not exactly 100% sure how that's even going to be funded, whether that'll be funded directly through the SBA or through lenders. So that's all yet to be determined. Okay, I'll move on to the additional SBA funding. And excuse me, everybody, as Steve mentioned earlier, we've been hit by allergies here in Charlotte, so I'm losing my voice a little bit. So SBA has, in addition to all these other SBA programs that are specifically for COVID relief, there are the traditional SBA funding programs. And those are going to be probably the easiest things to get right now, because it's going to be very hard for lenders to do any kind of traditional lending, or banks to do any kind of traditional lending with restaurants, theaters, people that have businesses that have been very hard hit by COVID. So your traditional 7A loans, for those who aren't familiar with it, you've got those are from $150,000 to $5 million. Sorry, and really the function of this is to provide lending to those who can't get lending through ordinary means, and those loan proceeds can be used for anything from working capital, equipment financing, furniture, fixtures, even building. And you can do loan maturities of 10 to 25 years on fixed assets. So they're also at very competitive rates. And the deal with these is that on the SBA loans is that the government guarantees part of those. Now, these are through other lenders. They can be through banks or non-bank lenders. But the government will guarantee 85% of them as long as they hit the underwriting criteria that the SBA has set. Now that makes it very attractive for lenders, private lenders and banks to lend this kind of product, because they guarantee that it's guaranteed. Even if you fail, the SBA is going to support that lender with 85% reimbursement. And then you have the SBA 504 loans. These are a little more complicated, mostly used for real estate. These are long-term. They have a lot of prepayment penalties. And there's a loan stack, there's a stack, basically a lending stack in there, and you're going to have 3 different tranches of lending. So it's a little complicated. It takes a really long time, but it can be a really good product for real estate. Switch to the next one, Steve. Then some of the other SBA programs there's the SBA Express Bridge loans. Those are also available through banks and private lenders. Those are small amounts, excuse me, used for working capital. And then we have the SBA Debt Relief Program. That came in through the CARES Act. And basically, it authorized 6 months of principal and interest on any 7A or 504 loans or even microloans. That was all, and that does exclude PPP. So this is just for existing loans on the 7A and 504, as long as those were approved before September 27th. Originally, it was funded before September 27th, and then the last round of changes, excuse me, they've changed it to approved by September 27th. So the next really important thing to consider is the cross-program eligibility. So as Steve mentioned earlier, the shuttered venue program is really important that you pay attention to those dates. That 12/27/20 is a very important date. You cannot use PPP funds after that date if you plan on using or applying for an SVOG. It will disqualify you. So please make sure that you pay close attention to that. If you did receive money after PPP funds after the 27th of December and have not used them yet, do not use them if you're planning on SVOG. I wouldn't even apply at this point for PPP if you haven't already, because again, that will disqualify you from SVOG. And then you could just pay attention to some of these other dates and all as far as the lending goes. As far as EIDL goes, that EIDL does not disqualify you from any other loan, basically, any other opportunity.
Chris, we've got a question.
Sure.
Question was that's specifically PPP funds from the second round, right?
That is, well, that would be from the second draw, because first draw would be well before that. If I understand the question correctly. Yeah, I mean, you could have first draw, you could have second draw, as long as it didn't happen before that date.
So then we'll hop back to traditional bank lending. So, we wanted to take everybody through the options of, or the different products that are available from private lenders, what you can do from a traditional bank lender, what's out there directly from the SBA that, yes, you would go through your traditional bank relationship, but this traditional bank lending here, talks more about what your next moves should be. So yeah, the best place to start immediately for everybody is with their current business banking relationship. I'm sure everybody has one, and it's really important. If you haven't already, I'm sure everybody has, but if you haven't, definitely reach out to them, try to get your SBA stuff started. And that's a great way to really get you the first funding that you're eligible for. As it says there, large national banks, and even if some of you are customers of theirs, they're definitely a little more inflexible. The Banks of America and Wells Fargos of the country, they're going to be a little more rigid. They don't need or aren't trying to get as much business as some of the more regional, local, and credit unions are. And those guys are really good because they care, the local banks, especially, and the credit unions, they care about what's happening in their local market. So they care about the theater in the local area. They care that there's 5 of them and they don't want to see them go away. So they're going to make those decisions locally, and they're going to try and be as favorable as they can towards those local businesses. And you always want to make sure you're speaking, because again, time is critical for us here. In this channel, we all are waiting and hoping that everything starts now, tomorrow. We'd love it all to start, but just be as efficient as you can and talk to the people who make the lending decisions. Know all the information that you need to know before you get started. You don't want to have to go back and forth and try to get them. They still have other business that they're doing. So you want to make sure you're getting all the information that you can over to them as quickly as possible, and the right information. And then, so private lending, comparing private lending, which is what we're doing, representing private commercial lenders versus traditional commercial banks. In traditional banks, all the funding that they loan out is from depositors, where on private lending, it's all from investors. So they fill a lot of the gaps that that traditional banks just aren't looking for. As far as the underwriting goes, the big banks really want to make sure that you have the 5 C's: credit, character, capacity, commitment, collateral, condition. They want to make sure you have everything, all of those things in order so that you can qualify. Where private lenders, it's a little different. And depending on who they are, they'll prioritize those and weight those differently. So, credit could be really important. Character could be important. It may be all based on collateral. So there are different, different criteria and weight to those criteria for these private guys. It doesn't happen always, but the private lenders are more risk tolerant and definitely more creative when it comes to trying to structure the loans. They typically are a little more, not always, but a little more expensive than a traditional bank, but that's really because they're gonna take on a little bit more risk. And one thing that's always important to remember, and Chris and I have run across this multiple times since we've started doing this, is somebody will say, "Oh, I don't want to do that. It's too expensive." You just have to remember there's a cost to not getting a loan. And that's much more costly than actually getting a loan that may cost a little bit more than the rate that you were hoping to get. So what's next? 2021 private lending. What will lenders be looking for in post-COVID-19? We've had some lengthy discussions with a lot of our lenders, and obviously we have a vested interest in making sure this market gets back to where we all know it can be. And prior to COVID, these lenders were all very interested in this industry. They loved theaters. They knew what you were going to get back. You knew when it was going to come. It was fairly predictable, and it was always something that was generating cash. So in order for them to be comfortable with it, again, we're going to start to need to see, or they're going to need to see, a trend of it moving over the next, or over whatever the prior 3 to 6 months from you looking for some loans or from some capital from these lenders. They're going to need to see a trend moving back towards, what we were doing prior to the pandemic. So 2021 trends need to start looking like they were in 2019. And also something that's pretty important is if you found a way to stabilize and pivot the business. We're a little bit of an example of that, pivoting to making PPE. I know there are a lot of other suppliers on this call who did that as well. I know theaters were looking for ways to, sell popcorn at pickup and candy and soda. So those type of things to try and stem the tide or stabilize the business, those are all really important when, making or filling out your application to get money from these private lenders, because they want to see that background. They want to see what you were trying to do and see your commitment to trying to pivot and stabilize the business. And then Chris will talk a little bit about some of the products that we believe will be a good fit and our lenders have available should you guys decide to go into the private lending space once we start to see theaters come out of the pandemic.
Okay, so these products are not relegated only to private lending. Banks will lend these same types of products, so these are not unique to private lending. although that's the world we live in and we play in. And private lenders, to go back for a second, we're not talking about people on the street. We're talking about institutions that are simply raising capital from investors rather than from depositors. So working capital loans, a lot of people are probably familiar with these. Their lines of credit are very similar to working capital loans. Basically, it's money to work through your everyday needs, from day-to-day needs. And typically these are not based on much other than credit, whether that's the business credit or personal credit. Sometimes they can be collateralized, but for the most part, we're really talking about based on credit. So you need really good credit to get working capital loans. Sometimes it's cash flow they'll look at as well. Again, that's it really depends on who the lender is. We try and put people with lenders depending on how strong their 5 C's are in order. And like Steve said, and if we know we have a lender that looks heavily at credit and really doesn't look at much else, and you have great credit, then we put you with that lender. And then you have asset-based lending. There's a lot of different asset-based products as a category, but real estate's primary. And for all of those people who own their properties, this is pretty easy if they're not already have tremendous amount of lien weight on that property. You can borrow against that property, even if it's a second position, even if there's already a primary lien on it. And then we move on to equipment financing. This is a great way for a lot of people to leverage their borrowing, because it typically doesn't hit your other lines of credit or anything else. It won't impact your credit negatively. If you are financing equipment, a lot of times that can be leased. And for those who know anything about accounting, it's a good position, a good place to be, because it's not on your balance sheet. You've got assets that technically you're financing, but they're actually being leased. And there are companies out there, banks and private lenders, who will lease just about anything, even the wires in your walls. And it's a good way to free up some capital if needed. And you have bridge loans. Bridge loans are short-term loans. They can be used for a lot of different things, but typically they're used in real estate. And mostly you would use a bridge loan when you have an obligation that has to be filled, or you have an opportunity that's arisen that's very time sensitive, because bridge loans will typically close very, very quickly. And they're short term, and they're maybe 12 months, 6 months, 12 months, 18 months. They're typically expensive. They're also referred to as hard money loans. So again, going to be probably twice as expensive as a typical bank loan of any kind. And probably more than that. It'll probably be triple by the time you add points and all kinds of other things. But like Steve said earlier, the opportunity it's not, there may be an opportunity cost to not doing it. Right? And then you have lines of credit. I think most people are familiar with lines of credit. These are revolving lines that you use for everyday needs, and they work really well because you only pay on the portion of the credit line that you've taken down. Okay, move to the next slide, Steve. So we want to talk about what our private lenders are really looking at, and what they will be looking at as we move forward. And those are SBA loans. Private lenders also do SBA loans. In fact, most of the loans out there, most of the SBA loans are actually done by private lenders. And there's their preferred lender. There's a preferred lender program, the PLP. So if you use a private lender, make sure they're a PLP if you're trying to get your SBA loan through them. Again, there's also asset-based financing that they look at, and there's a lot of different types of asset-based financing that can be done, a lot of different products out there. And we go through some of them. Some of them are, you can finance payroll. I mean, there's all kinds of things, and maybe some things that are not appropriate for this class of trade on the AR financing and PO financing and things like that, inventory financing. But so
I think it's also just important for everybody to remember the SBA products that that are available through the SBA that we were talking about earlier, the PPP, the shuttered venue operators grant, the EIDL, all of those things aren't what we're talking about here. We're talking about standard loans that aren't forgivable. While the EIDL isn't forgivable, it is something that you would usually do through your current banking relationship. What the 7A and the 504 are different, what Chris is speaking about.
just a correction on that. The EIDL goes directly through the SBA.
Right, sorry, directly through the SBA. So and the other ones that are forgivable, those aren't the same as these products. These products are true loans that you would pay back. They are very favorable compared to other loans, but I just wanted everybody to know that the difference between those. You want to talk about the supplier and asset-based?
Yeah, I mean, we just did that. So then we're talking about fitting it all together and just creating a plan moving forward on how to do it. So these are kind of the things that we recommend doing in order now. The first part of this has already obviously passed us now, but if you haven't already, as we mentioned earlier for the SVOG, if you haven't already received a PPP loan, whether first or second draw, it doesn't matter. Do not, even if you have received it, but you haven't used the funds yet, don't use the funds because that would disqualify you from the SVOG, as we said earlier. Definitely apply for an EIDL if you need it, if you want it. It's a low interest rate. It's $150,000, but you have 30 years to pay it back. And again, low interest rate and will not impact any other programs that the SBA has. Then we would say absolutely positively apply for the SVO grant. Again, we're not 100% sure what that's going to look like, but be prepared, because when it opens, I'm sure there's going to be a lot of applications rolling in. And back to those other couple of pages we showed you, those are the kinds of things you're going to need. There's also, if you go to the SBA website on the SVO grant, you'll also see a list of documents that they project that you will need to apply. And then, work through your current banking relationship or through us. We'd be happy to help to understand, basically what instruments are available, whether that be through the SBA or directly through banks or private lenders. Again, even if you're not going to use us and you have any questions or you need some help putting this together, we want you to reopen. We want you to survive. We want this business to thrive. So we're happy to help in any capacity that you may need us for. And then I think that concludes what we wanted to present. If we had any questions or anybody had any other thoughts or comments.
There, Chris and Steve, I don't know if you guys can access the chat, but there's some discussion about using several of these tools in concert and what you can and cannot do, with some information about possibly some of those rules changing as of the last stimulus package that just cleared. I don't know, it was just in the last week. Can you guys cover that, or do you want me to cover the conversation for you? Or?
No. So I can address it. So as we all know, this thing changes what seems like hourly. So we didn't want to present what might be happening, what might be changing. We just wanted to present what the SBA, the last thing that they said, that they stated and that they put in writing. And that's it's on their website. It's what all of the lenders that we've spoken to have all heard and said the same thing. I mean, we have 10, 12 different lenders who do nothing but SBA products. And when speaking with them, they're all on the same page of the information we've shared. Yes, things can change today, tomorrow, the next day. But again, we don't want to tell you one thing and say that's what we think is going to happen, and then it not be. This thing's obviously very fluid and changing and moving at a fairly quick clip. And you know, the same thing like the shuttered venue operators grant, that should have been opened for everybody already. I'm not quite sure what they're waiting for. But that's something that should, in our opinion, that should have been done already. So yeah, these things are changing rapidly and things are moving along quickly. But I do think it's only prudent for us to share the information that we know to be factual and not something that's being, you know, discussed now. That was the only reason why we haven't brought up any of that new information yet.
It's we'll just keep our fingers crossed that any changes will be favorable to everybody involved, but it sounds like possibly some of those things are getting a little better, which should be great. I have a follow-up question on some of the private lending options that you mentioned, and I guess it's a more overarching question, but are private lenders going to be enthusiastic to jump in with movie circuits and all of our vendors when we start seeing some business back to usual? What's your viewpoint on that?
Yeah, we think they will, Chris, especially when we see that they begin to see the stabilization and the growth again. And that's going to be really important. That's, as Steve said earlier, they want to see 3 months. They want to know that we're out of the woods, basically. And they're going to want to see some growth, some stabilization, some growth. And then we think they'll be very interested again.
Do we have any other questions out there? Again, you can use the chat function if you'd like to forward your questions.
I did see some questions about, or I think Kim was talking about the having separate EINs, and that's our understanding as well. As long as there's a separate EIN, each entity can apply for all of these programs, whether they be PPP or SVOG.
I am not seeing any more questions coming in. So
and just to address that, the private lending question again, you've got 2 people here who are going to be pursuing the lenders who were interested private to the COVID pandemic to continue, once we start to see recovery, to continue to push on that. So yeah, we're going to be all over it, trying to do everything we can to build up the excitement for the industry, to help get it the funding it needs, to run programs to acquire any theaters that may have unfortunately suffered and had to close during this, or whatever is out there, whether it's expansion, acquisition, working capital, anything that's needed. We're going to be pushing the lenders hard to give them the background on this industry, how it works, all the ins and outs, so they can make a decision that's more favorable for us in our industry.
any more questions? If not, we certainly thank you guys for your time. Very appreciated. Again, I think it's very nice to hear from you guys who are part of our industry and have been part of the association for a long time, but then also bringing in the expertise from the other side of your business. So thank you again. Really appreciate that.
Thank you. Thanks for the opportunity, Chris.
Yeah, thank you, Chris. Thank you, NAC, and thank you everybody for taking a little time this afternoon to meet with us and listen to us. And please reach out to us separately. We'll get this presentation over to Chris and Barbara and the team so they can send it out to everybody. And you have our AICP email addresses, our Park Cedar email addresses. Just feel free to reach out to us, like Chris mentioned, with any questions or concerns or any way that we can help, and we'd be happy to.
All right, thanks again. And again, thanks to AICP for sponsoring today's program. Just some reminders to wrap up here. The next check-in chat will be in 2 weeks, March 24th. We're going to be covering NAC government relations. We'll learn about the committee, how it works, and some of the things that they're working on. And as you can probably tell by today's topic, there may be some overlap there, or we may have some updates on some of the things that we're talking about, especially with the new legislation. There'll be a registration link coming out for that check-in chat March 24th. Also, I will remind you that there'll be a recording of this session, and that will be ready very shortly. And this just in, we have a sponsor for the next check-in chat. Actually came in during this meeting. So Colonel Seasons and Sour Brands are going to be our sponsor for the next time out. So good to see that we're getting some momentum on our new communication tool. So again, I want to thank everybody for dropping in today. We really appreciate it. Again, thanks to Chris and Steve. So in closing, you've been watching the NAC Check-In Chat, and that's brought to you by the National Association of Concessionaires, where food meets fun. I wish everybody a good night, and we'll speak to you soon. Thank you.